If you're trying to trade order blocks, but every trade that you seem to take ends up playing out just like this, and you're just left wondering why your order blocks aren't working, well, in today's video, I'm going to reveal to you the only order blocks that actually work consistently. You see, here's the truth. Order blocks form everywhere, but there are only 3 types of order blocks that are proven to work time and time again. And in this video, I'm going to be revealing to you all of those order blocks step by step. At the end of this video, this right here, what you're seeing now, is the trade that I'm going to be breaking down. It's also the trade that before I even took it, I was able to forecast to my members inside of our daily game plan. Now, just before we dive into that, you may be thinking, how do you know what order blocks actually work? And the answer to that is data. You see, over the last 2.5 years, I've collected data over hundreds and hundreds of trades showing you exactly which order blocks work and which order blocks don't. Because to just say something without having the data to prove it is just nonsense. And if you're wondering how I was able to do that, I used something that I created called the Trader's Operating System. Down below the link in this video, I will leave you a 45-minute free video explaining everything in detail about how the system actually works. You can check that out at the end of this video. So let's dive into the first type of order block that actually works. You see, how I'll be doing this is, first, I'll be explaining it in theory. I'll give you the theoretical construct on TradingView, and then I'll go and show you a real moment in price where you're able to see this in the actual charts, and we'll do that each and every one of them until eventually we'll get to the end, and then we'll dive into the trade. So without further ado, this is the first type of order block that actually works, and I call it the strong one. Now, just because order blocks work doesn't mean they all work, right? That's clearly established. You've probably already experienced that yourself. So here, what we have are 3 different types of order blocks. We have our first order block, our second order block, and our third order block. But only one of these order blocks is most likely to work, and the other 2 are proven to fail consistently. Take a guess. Which one do you think it is? Do you think it's order block 1, order block 2, or order block 3? So let me break them down one by one first and foremost. You see, order block 2 right here, right? A lot of traders get stuck in this trap, trying to trade from this order block. Maybe they see, a bullish expansion, a little bit of retracement, a bearish order block is created, and now they want to try and short from this area of price. Or maybe they try to use order block number 3. They see that we're bullish, we have a little bit of a reaction, and now they try to use this order block here. You see, the thing that both of these order blocks lack is context. Order blocks alone are meaningless. They have to have context behind them to support them. And that is what I call, again, the strong one. The strong order block is the order block that is created in the process of breaking some kind of important structural level. So if we look at this price action here, what we can see is that we have price pushes up, we have a pullback, and then price expands again to the upside. What we have right here is a break of structure. So we break structure right here. And now we have bullish price action. We have a swing low, we have a swing high. So trying to trade this order block right here, well, now you're trying to short the market, sell the market when we're actually bullish. And if you're trying to use order block number 3 right here, well, this is what I refer to as a weak order block. Why? Because it hasn't broken anything. If price starts to trade back towards this order block, this here becomes a failed low. You see, the only goal that a low or a high has is to take out the previous low or the previous high, right? That is literally it. That's what tells you who is in control of the market. So you need to identify the order blocks that actually break a level of structure like this. And in this scenario right here, that would be order block number 1. So if this was the market that I was looking at, and this was the price chart that I had, if it was me, I would be making the decision based off of using order block number 1, because this is what I would likely expect to happen. Right? You can see that both of these levels may give some type of reaction, but the only one that has a strong enough reaction and follow through is the order block that is created in the process of breaking a significant structural level. That is the big difference. So many traders are trading from these order blocks or these order blocks, and they just fail consistently because, again, not all order blocks are equal. So here we are, euro dollar on the actual market, and let's just literally play this out, understanding and looking at each order block and then labeling them. And then let's see what actually happens with those order blocks. Let's see what works and what doesn't work. Essentially, first things first is understanding our structural levels. So you can see that we are bullish, right? We had lows, highs, lows, highs, lows, highs. So we're bullish, right? So this is our swing low. This is our swing high. Okay, well, straight away here, I can already see two types of order blocks. The first one we have, which is right here at this London low, that would be our order block number 1. Now, this order block right here would be considered a strong order block. The reason for that is because it breaks the structural high. So we have a break of structure here. Then you can see when price puts in this high, price starts trading a little bit lower down here, and you see we have this bearish order block, right? So we have two different types of order blocks here. Now, some people are looking at this order block as the perfect opportunity to trade. Fair value gaps down here, Asia lows, right? A little bit of a market structure shift in here. Let's just see how price plays out. So you can see price comes into this first order block and we start getting a good reaction. Nice. That gives us then again another order block, right? So now we have another bearish order block, which again, still counter trend. Play price out. Now you can see that price has started reversing. It's making its way back up towards this order block in here. Now price has traded through this order block. So this one has already been invalidated. And now we've come back into this same order block once again. In that process, what have we also done? We've just created another bullish order block right down here. Now to categorize this order block, this for me is an order block that is a weak order block. Price would have to break this high in order for this to become strong. So right now this is weak. And on top of that, it's sitting on equal lows, right? So liquidity. Let's see how things play out. Okay, so price starts shooting its way down toward this demand level here. We get into that level, we have a little bit of reaction, and then eventually we end up trading directly through that level. Now we make our way into the strong order block, right? So we're still battling between this one here and this one down here. Which side of the market is going to have the actual follow through? Okay, just play price. So now we can see that this one is producing a really nice reaction, and now we're coming back up to the old one that existed up in here. Remember, this order block here hasn't taken out these lows. This one here has taken out the highs. This is the strong one. Continue playing price. Okay, cool. And now this order block gets completely annihilated. Even continue doing it again. Now what do we have? We have bullish structure continuation. So we have our swing high up here, which we can draw across here, and we can see that that broke structure. So that's a break of structure. So we've continued to be bullish. Now we need to find the swing low. In order to do that, just take the highest point before we break structure and bring it down to the lowest point. If you find the lowest point before we break structure to the buy side, that is going to be your swing high. So we have high, higher low, high, high. So this right here is our new strong low, which makes, again, another really clean bullish order block down here at a strong structural level. What else do we have here? Well, we also have a bearish order block right in here. So again, you can see there's two different types of order blocks here. One is the bearish one is the bullish one that's actually broken structure, right? We keep playing this out. See this one gets traded into, okay, cool. We come back into the strong one. Again, now we're really just battling out between these two. Is this high going to take this low, or is this low going to take this high? Right? We're trading back into this one. We're having somewhat of a reaction. And there you have it, right? We have that continuation follow through. And this bearish order block gets destroyed. So you can see here, this is a few days worth of price action. And every single time that there is an area to trade from, it is the area that has the reaction follow through. Because remember, if you want to find the best order blocks, they have to have the follow through. It's no good just reacting with a little reaction. No, it needs to come into that level and trade out of that level toward the opposing highs. So here you can see, this is two examples within the space of 2 days of where the strong order block is continuously respected and then has the follow through. These are the levels that you want to be trading from. Notice how many other types of order blocks there are in this price leg, right? Bearish order block here. Price comes into that level, gives a reaction, and then trades straight through it. Bearish order block, gives a reaction, trades straight through it. Bearish order block in here, right? So many traders are looking at something like this bearish order block here, for example, and they're looking at this, okay, we break structure down here. That's going to be our bearish order block, and then it just gets traded straight through. The reason is because this low is meaningless, right? This is a meaningless low because the structure is this low to this high. So many of you are getting trapped when you see these little breaks in here and then trying to trade from these, but then they constantly get traded through and you're just left wondering why it's not working. It's because you're picking either weak order blocks, so levels from weak areas of price, or you're picking ones that are actually just counter trend, which is the worst type of order block. If we are moving bullish in a certain direction and we have somewhat of a pullback, you do not want to be trying to sell here, because the reality is price is expected to trade through that level. So that's the first type of order block that is proven to work. Again, 2.5 years of data, hundreds of trades taken, that tells me that this works. Moving on to the winning order block number 2, which is what I call the sweep. This is probably one of my personal favorites. It's essentially where we have a buildup of liquidity. This can be at some equal highs. It could be at Asia session high, Asia session low, previous day's high, right? A pocket of liquidity. And then we sweep into that level and then have an aggressive reaction out of that level. And then we leave behind this order block. These, again, are some of my favorites. You're expecting them price to trade into this level and then trade away from it. Very, very simple explanation. Let's just dive straight into a live example where you can see this play out. So here we are again on the actual chart itself, and we're just looking at the different types of order blocks that are readily available to us at this moment in time. The first thing that I see is obviously this bullish order block here, but there's something very important that you must understand when you see these types of levels. You have to always be on the lookout for liquidity. You can see we have Asia session low here. We also have a bunch of stacked up lows internally in here, and you see price starts to have a bit of a reaction, but that there as well, this entire area then becomes a large level of liquidity. Now, it's not to say you can't trade this strong move. There are going to be times where even your obviously strong order blocks don't hold, but you do want to be very cautious of these levels. And so, if you know what you're doing, you want to be waiting for these types of sweeps. When you have a sweep of liquidity, and then you create that order block. So here, for example, we have a bullish order block from this level. That's the type of move that you want to be getting involved in, because now we've taken liquidity. So the moment we take an area of liquidity and then produce an order block in that direction that's also aligned with kind of that high time frame trend, that's the level we're going to be using. You can see price comes in and gives immediate aggressive reaction. That's what you want to see from your levels. And again, look at the difference. There's a bearish order block in here, right? Many traders may be looking at this level and thinking that, oh, okay, this is a bearish level. Maybe it's had some kind of, internal break of structure. Maybe I'll trade it, but you're looking at it all wrong, right? There's no context behind why this would hold, but there's all the context as to why this would hold perfectly after a sweep in the direction of the overall trend. And so there's, again, just another example of understanding the actual sweep model. And we'll put this all together into practice when we move on. Let's kind of now take a step over into the third type. And this isn't actually a type of order block. It's something that I like to do to all of my order blocks in order to increase the probability of them playing out. This is honestly my favorite concept, which for me is confirmation of order blocks. There are order blocks everywhere. Not all order blocks are the same. And even the ones that work better, you still want to be able to confirm those order blocks before you trade them. So I'm going to teach you now how I not only increase the probability of my order block working, but also increase my risk to reward from that order block. And again, I'll just kind of show you exactly what that would look like. Here we can see we are, again, bullish, right? We're expecting high prices. You can see that we had lows in here, price pulled up, price put in new lows, and then we go higher high, higher low, higher high. So we're bullish, right? Our swing low is down here, swing high is up here. So first and foremost, the different types of order blocks that we have here. Order block 1, which you could use as this level in here, right? This is part of the bullish delivery. And then the second one really is, we just want to look at this sell to buy that also takes a level of structure. So we're just going to look at anything from this kind of sell to buy. And considering that we're already inside of that range as we head into London session, we can just refine it to here. So this is, again, a very important thing is time. So now it's 1:45 a.m. So the London session is just about to start. So instead of just looking at this, maybe, for example, you get yourself into the situation where you have 2 different order blocks in a price leg and you don't know what one to trade. Or maybe the order block is large and the risk to reward is low. If I wanted to just trade this, for example, right, and my target was here, then that would be a 1 to 2 risk to reward. And then if I wanted to trade, let's say from this one, it would be a 1 to 3.8 risk reward. Let's just say 1 to 4 risk reward. Okay, that's a little bit better. But then let's say, because you don't know which one to use, you have to take your risk, so for example, maybe 1%, and you have to split it across 2 positions. So now you're able to put 0.5 on this trade and 0.5 on this trade. Or maybe you put your full 1% on this trade and your full 1% on this trade. However you try to do it, there are many limitations by doing this. The first one is you have a very low risk to reward, right?
that risk reward is unfavorable. The second thing is that you don't know which one to use, right? And then the third thing is you don't actually know whether they are going to work until you've done what I'm about to show you. So what I like to do, instead of just trying to trade from here, taking low risk to reward and gambling in some sense on hoping that that order block plays out, I confirm them with lower time frame market structure. So here on the 15-minute time frame, now when price gets into this level, I don't just try and execute a long position. I wait for the market to tell me that this level is going to hold, and then I make my move. So when I get into my levels like this, I just drop down into the 1-minute time frame. And then once I'm in the 1-minute time frame, right? Again, if we zoom out, you can see that this is still those order block 1, order block 2. Once I get in here, well, it's clear to see as price makes its way down, we are extremely bearish. So we can kind of just look at our M1 structural levels, right? We have low, high, lower, low. We break, higher, high, higher, low, higher, high. We break bearish, lower, low, right? Come into here. Where do we break? Really just here. And then I can just literally look at this high here. So that high right there, for me, is in control of price right now. Price is trading lower. So I could just risk it and just try to execute, but my risk to reward is low and I don't have the confirmation to tell me that this level is going to work. So I just simply apply patience. I will just wait until we get this. This right here is my confirmation. This tells me that this level is actually what I think it is. It tells me that there's a good chance that this level could end up holding. And then what I'll do is when we get that shift, I'll literally just head over to a 5-minute time frame and find the exact same thing, right? Notice the difference. What do we have here? We have a order block down here, right? A bullish order block from this level that does what? That breaks structure. So we have the exact same thing replicated just on a lower time frame, same principles. So we're coming from this bullish order block, but we're coming from that level with the confirmation. Now, what's the difference? Well, first and foremost, I have the confirmation. So I know there's a higher probability of this now, this order block here being respected because it's already coming in and giving us the reaction telling us that yes, there were likely orders in here, or yes, there is an interest of price to trade out of here up toward these levels. So it's confirmed and give me, a higher level of conviction, a higher probability of playing out. Secondly, I don't have to split my risk across these two positions or gamble and hope that one of them works. And then finally, and most obviously and most favorably, we increase our risk reward. So where we could have just tried to enter here and just use this entire level and take a 1 to 2, what we're able to do now is try to get in after we have the confirmation. So there's even more chance of this playing out. And instead of it being a 1 to 2, we're able to stretch it up to a 1 to 5. So that risk to reward increases, the likelihood of it being successful increases, and you remove having to guess and hope which order blocks are actually going to work. You wait for the market to show you which order block is going to work. And so this, in of itself, will take most types of order blocks and transform them into definitely more profitable versions. And then it's just a waiting game. You're just then waiting for price to come back into your level and then seeing from here how things actually play out, right? And you can see, you can just follow the footprints, right? We get our first order block, we push out, we come back. We get another push out, which gives us what? Another bullish order block. And that same level is now currently being respected. And then we push out of that level. What does price do again? Gives us another bullish order block, respects that level, and then pushes out of that level again. It's just rinse and repeat of the same process. And then eventually, we just run straight into those highs. So that is how you actually confirm whether an order block is likely to play out or not, and increase your risk to reward in the process. So now let's take all of those things and let's tie it together from the trade that I took today, 4th of July, along with a bunch of my inner circle members. Now, just before we dive into this trade, the actual system that I used to build this system is called the Trader's Operating System. And just below this video, I'll link to you a 45-minute long free breakdown of that entire system that you can watch at the end of this video. So let's dive in to break this trade down. So here we are, euro dollar, 15-minute time frame. For this specific strategy, this is the time frame that I'm usually going for. You can see, obviously, we're extremely bearish, right? So if we just want to map out our structure points, you can see that we were bullish, but we had a swing high here, a break, well, change of character down here, swing low, swing high, lower low, pull back, lower high, lower low. right? So we're bearish. Our swing high is up here. Yes, there is a lot of liquidity above here, but we can cross that bridge if and when we approach it. It doesn't have to be right now. So we're bearish, right? So that's the first thing. I'm looking for shorts. Now, again, what do we have? Well, in this region, right, in this entire region, there's a huge buildup before an aggressive sell-off in NFP. We also have, you could look at this here as a bearish order block, and now we're inside of this price region. But again, another key thing here that we have is we have Asia session high, which is above here, and we've already liquidated Asia session high. So we're bearish. That's the most important thing for me. We've liquidated Asia session high. Now I'm essentially, as London is about to open, it's 1:45 a.m., London opens at 2 a.m. As London about to open, I'm just waiting for confirmation that the market is going to reverse because I'm already expecting lower prices. Again, this is the biggest mistake that I think that traders are making with order blocks. Order blocks need context. You need to be trading in alignment with the overall direction of price. When you do that, the order blocks that you select are much higher probability. So for example, by us looking at, these areas in here, right? These areas are responsible for breaking this low. And now we're inside of these areas after a sweep of Asia session high. And so I'm just looking at the market to tell me that it's going to reverse. And the way I do that is through lower time frame confirmation. So I'm here on the 1 minute time frame. And again, what do you notice? As we head into London session, look at this 1 minute chart. This 1 minute chart is aggressively bullish, right? We just kind of dive in here. As we really approach, right, 2 a.m. is London open. As we really approach this area, you can see that we're just constantly getting higher high, higher low, higher high, higher low, higher high, higher low, right? Just constantly bullish structure without any shift. And then what happens? Notice as well that these are really just clean delivery on price. Then what happens? Well, we get to a turning point. We go from this bullish leg here, and then we start slowing down. Now, this is the first sign of a reversal. When price has been moving aggressive like this, and then we start slowing down, and then we have this sell-off here, that's your first sign of a reversal, but it's not confirmed yet. What then happens is we get another break of structure. So we're still bullish, so nothing has been confirmed yet. For me, in order to go short, I would need to see this low here get taken out. If this low gets taken out, everything shifts. We go from demand in control, buyers in control, price trading higher, to sellers in control, supply in control, price trading lower. That becomes my shift. And you can see, look how London opens. This is London open right here, 2 a.m. It opens with a massive sell-side sell-off. So that for me is clear indication that there is an interest in lower prices. Again, on top of all of the other context that we already have. We already have the idea that we're bearish. We're already above Asia session high. We're already inside of these areas of interest. So that becomes my guide. That becomes my insight. And then again, same thing that I did last time. I'm just going to the 5 minute time frame and I'm identifying the order block. Notice here, how clean is it, right? We have a very aggressive move. We have the final buy before that very aggressive move. Like look at the volume that's probably inside that candle. Confirmed by this change of character. Then it's just a case of shorts, right? Put my stops at these highs in here. Pretty low stop size, just because again, it is the 4th of July, it is Independence Day. There is lower levels of volatility and liquidity in general. So you're gonna get lower stops, you're gonna be a little bit higher spreads, but hey, it's not that big of a deal. And really the main target that I have for any of my positions is just 5 risk reward. That's my first target. I'll add a couple of other targets on there. For example, like I also had here, because it's also a Friday as well, don't forget. Like I don't want to be holding my trade over the weekend. Not ideally, if anything, very small amount of my position. Another area you want to be looking at is, your 50% of Asia as a retracement. So we have my 5R, right, which is every single trade is going to be fixed 50% at 5R with this specific model. Don't forget, I have a couple of different systems, right? With this model, it's always like this. And then trade plays are like this. We get tagged into the position, price moves aggressively lower. Now, here's the difference. I don't go to break even here because what happens? We leave another bearish order block that does what? Also break structure. So if you didn't capitalize on the first one, then you could capitalize on the second one, right? I can't go to break even yet. Now I can go to break even because we've continued lower. There's no reason for price to come higher. That's how I manage my positions. You can see the first level gets hit. That gives us 5R. So 50% of my position is taken off at that level. And then we see the 50% of Asia get taken out inside of New York. Again, look how close we come back to this break-even point, right? This is why also the management side of things is super, super important. right? Then we come into my 50% of Asia as my second target. And then I also had some extra targets on for this position, like Asia session low, swing lows down here, and even all the way down to the swing low down here. But as you can see, we didn't end up getting those targets. We ended up trading back through, and the rest of this position was taken out at break even, which is why this trade only ended up netting me $30,000 instead of what could have been a lot more in this specific trade setup.